Equal weight S&P 500 ETF has made a fresh record high. Most likely the S&P 500 and the Nasdaq will make a record high as well pretty soon. We will look at utilities and long dated treasury bonds as they keep moving lower contrary to the rest of the market. So I wonder if they're sending some sort of a warning to stocks, and we'll try to discern if there is indeed a message there. I'll show a recent trade highlight for Dollar General. If you opened recently, congratulations. And we'll finish up with gold. Maybe it already topped, maybe not. Let's take a look at it. As always, don't forget to like, share, and make a comment on this video. Make a comment at the end of the video, and make sure that you can actually just put like thumbs up or hearts in the comment section. So thank you for doing that. If you're a subscriber, stay tuned. We'll be covering lots of various securities, namely market breadths, Bitcoin, and junk debt will be covered in the members only section. Some of the large cap stocks will be covered there, ETFs, as well as some of the speculative securities. Some of them are really unknown, like Cabaletta Bio, Sano Bio, Gevo. So all of these stocks are very new and unknown, but they are showing interesting patterns. So stay tuned if you're a subscriber. If you're not yet a subscriber, consider signing up by going to Master Charts Trading. There's a link in the description. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this chart. There's green, blue, red, yellow lines, and they are available for tradingview.com. Let me know if you need any help signing up. So we're currently looking at S&P 500, also known as equal weight S&P 500, ticker symbol RSP. So in this fund we have basically the same stocks as the S&P 500, so 500 stocks. But as opposed to S&P 500, like just the actual index, where the stocks are ranked by weight as a capitalization, as a market capitalization, within the RSP, the equal weight ETF, each stock is weighted identical. So it's about like 0.25, I guess, percent for each of the 500 stocks within the S&P 500, something like this, very little. So, Apple would be weighted the same as, I don't know, let's say Tesla, even though they're different size markets. So within this ETF, looks like we just made a new record high. There's a new record high that was made today. So what this is showing me is a relatively broad participation. In other words, even though some stocks are larger, some stocks are smaller, all of them seem to be participating and are pushing towards new records. So we can actually look at RSP on the longer term, and you can see that this is indeed an all-time high that was just set for equal weight ETF. This is a good news in a sense, because this is showing again that the market is not just being driven by the likes of Google and large cap stocks, but indeed we're seeing broad participation from the rest of the market. So I think the actual index, the S&P 500, most likely will make a new record pretty soon. So for example, today we closed at 6,870.4, and this previous resistance, which was on November 12th, was 6,869. So we just exceeded and closed above that previous high, which is good news because I think the road is quite open to new records now. I think we can easily make new records to, as far as what's this immediate projection. So we can see this sort of pattern here, where like a V-shaped pattern, and basically the depth of this pattern is about 5%, so we can expect at the very least, if we see a breakout above the previous record highs, then most likely we'll see a new move towards around 7,300. So that's about right, I would say. So actually I have shown this similar thing in the past, and this was from way back when we saw a breakout to new records on June of this year, and the depth of this pattern at that time, this big V-shaped reversal, was about 1,300 points. You can see the 1,300 points puts us somewhere around 7,500. So if I'm correct and we're going to see this breakout, we're going to most likely get to around 7,300 or so. So we still have ways, to run before even this really deep, huge pattern that occurred in April of this year with the tariff freakout will play itself out. So I'm moderately confident that we will break to new records and continue higher. However, I wanted to take a look at some of the other inter-market perspective, so to speak. So for example, on this chart we're looking at utilities. And so utilities are this sort of special sector within the various sectors of the stock market. The utilities are more dependent on the interest rates. So utilities usually borrow large amounts of money, and the lower the interest rates, the more profitable and the easier it is for utilities to operate. So right now what we're seeing is from record highs that were set in October, we basically continued lower. But notice that for S&P 500, the highs were also set in October. We pulled back, but now we're back, towards the records again. So this is the divergence that I'm looking at right now. Notice these utilities are going lower, and the S&P 500 is clearly pushing higher. So why would utilities be pushing lower when the general stock market is moving higher? So this is one of those things that we need to be kind of paying attention to, because I have heard other professional traders talk about utilities sort of as a bellwether of the market. And so if utilities are suddenly like dropping, we should be paying attention. And so I was looking at some of the bond market. So this is long dated treasury bond. This is 20 plus year treasury bond ETF, ticker symbol TLT. Technically speaking, we're in an uptrend, and you can see this breakout above the blue support resistance line where I'm hovering on October 1st, and we're currently in an uptrend. In fact, we're coming down towards this blue support resistance line, so at that point I would be considering buying around the blue line again. So TLT, you can see this level at around 87.65. At the same time, when bonds are dropping, treasury yield is rising. Okay, so now we're looking at treasury note yield, 30-year treasury note yield. And I thought that we're going to continue lower when we broke below the support on 15th of October at around 4.62%. However, notice that we didn't really go far. We just turned right around, and now we're actually approaching the other part of the equation, the bullish levels, which are above this blue support resistance line at 4.83%. So right now, all of a sudden, we see treasury bonds dropping together, with utilities, but at the same time, as bonds drop, the bond yield rises. So if we get above 4.83, this would imply that treasury bond yield is actually in an uptrend. Okay, and it's not really a good sign, because what I understand is everybody wants lower interest rates, obviously. So perhaps that's what utilities are feeling. They're already kind of dropping in anticipation of higher interest rates. Higher interest rates are also not great for the stock market, and there is no strong correlation between performance of stock market and interest rates, but lower interest rates generally is better for stocks. So this is what we're seeing right now. Utilities are for some reason diverging away from the stock market, together with the bonds that are dropping, and by extension the interest rates when the longer dated bonds are rising. So we'll see where this gets us, but it is possible that this is a sort of a warning to the stock market, and utilities are already feeling it. Also, it's possible that this means nothing. It's also possible that there's just nothing wrong yet. Okay, and we're just sort of looking at it with a little bit too much trepidation. So what do you guys think? Let me know in the comments. All right, now I wanted to highlight rather a recent trade that we did here at Master Charts Trading, and it is for Dollar General Corporation. So how do we, generally speaking, look for stocks to buy? So two ways that I look for stocks to buy. Number one is what's called a breakout trade. So a breakout trade implies, in this case, for example, this is a breakout trade. So notice that Dollar General broke below the yellow support resistance line right here on August 2024, so last year. So from then on, we're saying, okay, the Dollar General is now in a downtrend, and we're looking for opportunities to sell short. So for example, an opportunity to sell short would have been here at around the red line. It wasn't really a successful opportunity, and selling short during a general bull market is actually contraindicated. So right now we have a general bull market, so looking for opportunities to sell short is not ideal. As they say, tide lifts all boats, and the tide currently the tide is up. The stocks are going up. So look for opportunities to buy stocks, not to sell them short. And so right now we were looking for opportunities to buy stocks. So in this case, Dollar General was below the yellow support resistance line and hasn't yet closed above the blue line. So at this point, like sometime between August 2024 and May of this year, 2025, it was basically not on our radar to buy them. Suddenly something happened, and right there where I'm hovering on the 3rd of June of this year, we saw a close above the blue support resistance line, and at this point, this is the beginning of a bull market. So, bull market for Dollar General. We're looking for opportunity to get the stock at the best price. So I wasn't, I wanted this gap to close. So from 2nd of June to 3rd of June, there was a relatively sizable gap, about 10% or so. So I was waiting for it to close, and it sort of did actually. Yeah, like around here. So notice that this gap was still open, but then around October you can see it closed. There's no more gap because the price came down and closed the gap, and then I'm like, okay, this is it. Around October 31st I saw this opportunity that the price was breaking below the blue line, but was not really making any progress down, and it closed above the blue line, and basically this is all I needed to know at this point. And notice that the stock took a little while, but the last 3 days it just skyrocketed on earnings. Earnings were positive. Again, don't count on earnings to be any kind of catalyst. I mean, definitely it's a catalyst, but you don't know if it's going to be a positive or a negative catalyst. Sometimes there's a positive earnings, and sometimes there are negative earnings, and sometimes there is the reaction of the market to those earnings are completely wild. Sometimes they're positive, sometimes they're negative. Unpredictable. In this case, we're just looking at levels. We're looking at the price level, and if the price level is right, and the price is good, we're buying it. And in this case, we can see it clearly on the chart because the price came down towards the blue support resistance line. It implies being oversold. Okay, and so we went ahead and we bought here. So now the last 2 to 3 days, the move was really significant. Stock is up over 36% since the alert was issued. Congratulations if you opened. All right, let's quickly look at gold, and let me see if there's Bitcoin. No Bitcoin this time. Dollar, we're looking currently at the dollar currency index, DXY. So longer term, dollar is in a downtrend. However, it's been trying to, I think it's been trying to bottom basically. So this is the 3-year low here on 17th of September. We're kind of rising in this wave-like fashion. We got to August highs on November 5th, but we couldn't get through them, above them. Again, we tried to get through those August highs on November 20th and so 24th here, 20th, 24th, and again failed. And now we pulled back, almost back to the yellow line. And I have a suspicion that we might actually touch the yellow line, but I'm not 100%. No, nothing is 100% in this business, but I'm thinking we're gonna bottom here, something similar to what happened on the 16th of October. If we bottom here and again attempt to rally, then we need to look at gold because we trade gold. So notice that dollar has been pulling back since November 21st. Gold has been taking advantage of that fact and has been moving higher. However, notice this November 13 high right there on the November 13 high right there where I'm hovering on, and it was around $4,245 per troy ounce. And so we actually tried to get above that level on the 1st of this week on Monday, and again within the week and today as well. So right now it's actually looking like a potential shooting star candlestick. It's more obvious on the chart of GDX, but I'll show it to you in a second. This last candlestick looks very much like a shooting star, and this showing resistance. So it looks like we have 1, 2, 3, 4 days of attempted breakout above this November highs, but so far we have failed. So if the dollar indeed bottoms and holds support here at the yellow line and maybe even rallies, gold could be in a world of trouble because there is clear resistance that is being reasserted. Unless suddenly, gold just breaks higher and continues to records. It's possible. It's a very bullish chart. And technically speaking, this is like maybe a cup and handle even. And so if we break above this cup and handle, then we'll continue higher. But it basically all eyes are on the dollar. If dollar holds support and rallies, then gold will be in the world of hurt. So this last candlestick that I'm showing right now, right there where I'm hovering, it also looks like a shooting star. This is GDX gold miners, and so again, if dollar rallies, then gold and gold miners will definitely come under pressure. Hasn't happened yet, but it's possible. That's it for this week's recap. Please let me know what you think. Head over to MasterChartsTrading.com, click on sign up one of the products. So again, I have trading indicators, newsletters, and a combination product, both of them. So trading indicators, you can see them on this chart. There's green, blue, red, and yellow lines. They're available for this interface. This is TradingView.com interface. Sign up on my site, MasterChartsTrading.com, for one of the packages that has indicators. Come back to TradingView.com and then send me your. If you don't have a TradingView account, just open a free TradingView account. If you already have a free TradingView account or any TradingView account, just send me your user ID that you have for TradingView, and then once you do that, I'll open the door for you and you can use the indicators on your chart. And of course, the other thing is I send out daily alerts and weekly members only videos, so newsletter. Both indicators and newsletters are included in the ultimate package. I think the best deal again is to get both indicators and newsletters at $599.95 per year or $49.95 per month. You get 2 months free. All of the packages for the yearly plan get you 2 months free basically. But don't forget that every single package has free 7-day trial, so you can try it out. If you don't like it, cancel. That's it for this week's recap. Again, don't forget to hit the like button, make a comment, share this video. Thank you for watching. Have another great trading week. Bye-bye.